Hello, and welcome to another episode of Money Matters. In today's video, we're diving into the world of retirement investing. If you're planning for your golden years and want to make the most of your investments, you've come to the right place. We'll explore the best investment strategies specifically tailored for retirement, providing you with the knowledge and confidence to secure your financial future. So, let's get started. Before we delve into the strategies, let's take a moment to understand why retirement investing is so crucial. Retirement is a time when you want to enjoy the fruits of your labor, travel the world, spend quality time with family, and pursue your passions. To achieve that, it's important to have a solid investment plan in place that can generate income and sustain your lifestyle during your non-working years. Now, let's define what we mean by investment strategies. These are the approaches and techniques you use to allocate your retirement funds across different investment options, with the goal of maximizing returns while managing risks. The right mix of investments will depend on your personal circumstances, risk tolerance, and time horizon. Strategy number 1. Asset allocation. This refers to the process of dividing your retirement portfolio among different asset classes, such as stocks, bonds, and cash. The goal is to create a diversified portfolio that balances risk and reward. Generally, when you're younger and have more time until retirement, you can afford to have a higher allocation to stocks, which have the potential for higher returns but also greater volatility. As you approach retirement, it's advisable to gradually shift towards more conservative investments, such as bonds, to protect your capital. Remember, asset allocation is not a one-time decision. It's important to regularly review and rebalance your portfolio to ensure it aligns with your changing goals and risk tolerance. Strategy number 2. Dollar cost averaging. This approach involves investing a fixed amount of money at regular intervals, regardless of market conditions. By investing consistently over time, you buy more shares when prices are low and fewer shares when prices are high. Dollar cost averaging helps smooth out the impact of market volatility and reduces the risk of making poor investment decisions based on short-term market fluctuations. It's a disciplined approach that can be particularly effective for retirement investing, where you're investing over a long period. Strategy number 3. Tax-advantaged accounts. Another powerful strategy for retirement investing is utilizing tax-advantaged accounts, such as 401k, IRA, and Roth IRA. These accounts offer tax benefits that can boost your retirement savings. With a traditional 401k or IRA, you contribute pre-tax money, which reduces your current taxable income. The earnings in the account grow tax-deferred, meaning you don't pay taxes on them until you withdraw the funds in retirement. This allows your investments to potentially grow faster. On the other hand, a Roth 401k or Roth IRA uses after-tax contributions, but withdrawals in retirement are tax-free. This can be advantageous if you anticipate being in a higher tax bracket when you retire. Strategy number 4. Diversification. It involves spreading your investments across different asset classes, sectors, and geographic regions. The goal is to reduce the impact of any single investment's performance on your overall portfolio. By diversifying, you're not putting all your eggs in one basket. For example, if you have a mix of stocks, bonds, and real estate investments, a downturn in one area may be offset by gains in another, helping to mitigate risk. Strategy number 5. Professional advice. A qualified financial advisor can provide personalized guidance tailored to your retirement goals and help you navigate the complexities of retirement investing. They can assist with assessing your risk tolerance, creating an investment plan, and making adjustments as needed. That wraps up our discussion on the best investment strategies for retirement. Remember, retirement planning is a long-term endeavor, and it's important to start early and stay committed to your investment plan. By following these strategies, asset allocation, dollar cost averaging, utilizing tax-advantaged accounts, diversification, and seeking professional advice, you'll be well on your way to a secure and fulfilling retirement. Thank you for watching. Please do not forget to give this video a like, and subscribe to our channel, so that we can continue to bring you great financial contents.